few more people probably start trickling in, but we'll just get started. For those of you that don't know me, my name is Cecilia Pacheco Vicenti. I am with UNM Rainforest Innovations. This is part of our programming in collaboration with the New Mexico Economic Development Department to bring some technical training based on discovery that we've made through our Tribal Entrepreneurship Enhancement Program. About topics that are huge needs for our different entrepreneurial communities throughout the state. So thank you for joining us. Today we have a special guest, Amber Hillis Parker. She is a licensed CPA and also the founder and CEO of Hillis Parker and Associates, which is an accounting firm out in Farmington, New Mexico. So she will be doing this workshop for us on navigating your business finances, a guide to key bookkeeping and compliance. So if you don't mind turning on your camera, Amber, and doing a little introduction for us. Thank you for being here today.
Absolutely. Hello, everyone. I'm Amber Hillis Parker. I am of the Towering House people, born for the one who walks around. I was born and raised in the community, Fort Defiance, Arizona, and I'm so happy to be here with you all. So, hello, everyone. Kind of talked about myself a little bit beforehand, but I'm Amber Hillis Parker. I'm of the Towering House people, born for the one who walks around, born and raised on the Navajo Nation. And I have over a decade experience in the accounting field. I've managed financials of 150,000 to 132 million. I've been an auditor, controller, accounting manager, agency director, all those fun things. I'm also a wife and a girl mom. I have 2 girls, and my passion is really rooted in seeing my dad run his business. So here's a picture of my dad and me as little girl. So my dad was a master electrician. He was licensed in Arizona and New Mexico, and he would wire houses across the Navajo Nation, New Mexico, Arizona, on and off the reservation. And my dad had his business like roughly 13 years. And in that time frame, my siblings and I would help my dad. So we'd pull wire, we strip wire, whatever support that he needed with his business. And as I got older, my dad was not working in his business. And when I got to an age to really understand what was happening, I had asked him what had happened. And his comment back to me was that he really wished that he had a good CPA on his side. And I was probably about this age here in this picture with my troll. How many people remember trolls? That was a big thing back in my day. So we love trolls, and that's my little troll there. But that was really like the onset of really seeing how entrepreneurship is and the struggles that are with that there. And he was really initially the person that sparked the idea or planted the seed, and really not really knowing that until many years later. So with seeing my dad run his business and the ups and downs that came with that, I set out to develop Hillis Parker Associates. So we're Indigenous women-owned accounting firm. We provide bookkeeping, accounting, and advisory services to entrepreneurs and nonprofits. We're based in Farmington, New Mexico, but we work remotely with clients across the US. And we really focus on specializing, mapping your own unique path to freedom, wealth creation, and money, financial knowledge. We currently do have a sister company called Her CPA, where we really look on supporting women entrepreneurs. So this is just a general disclaimer. So this information is for informational use only. Please contact your own CPA, your legal team, your accounting team, just to verify this advice and to implement that. So the goals for this session is we want to discuss why financial statements are important. Usually people know taxes, right? Like we all know taxes. We know that tax season comes around and we want to get things in order and get that going. We also know that there is a time that we do bookkeeping preparation, and we're going to kind of talk about that and how that looks. We're going to talk a little bit about some business expenses, and then what we're going to do is move into some weekly, monthly, quarterly, annual tasks that is really important for you to incorporate into your business. And then we'll end with some little tips there. I will say that when it comes to the section about the tasks, depending on where you are with your business, this might be something that you just keep your awareness of. This might be something that you actually go back and verify that this is happening. So this is really the meat and potatoes of our discussion today. And it's a lot of information at once. And I just want you to honor yourself and be able to take in what information you can at that point in time. So in the chat box, can you please tell me, entrepreneurs, why you started your business? Maybe like 1 or 2 words or a sentence. If anyone wants to put that in the chat box there. I see we have some participants. So what is the reason why you started your business? Anyone? All right, well, those are coming in. We're going to go to the next slide. So someone had their business started. My husband started his photography business when his father died. Okay, so maybe like carrying on a legacy or really wanting to, capture those moments and provide that to other people. So when we really look at why people start a business, right, we look at different areas, and it usually falls into one of these sections. Usually it's their passion, right? It's their passion to be able to provide this service that they're so great at doing. Or maybe it's like you want autonomy or independence, right? A lot of times we want to have the ability, excuse me, to make our own schedule, to pick, when we work and how we work, and or even extra income, so hitting those financial goals there. Or it might be a little bit different and you see a need in the community and you want to make a social impact, or you have a brilliant idea and you want to bring that to the market and provide a market solution. So regardless of why you started your business, what we normally see is that when we go from a technician to a business owner, right? We might be the best person that can take pictures, or the best person that can do bookkeeping work, or be able to maintenance different things, or even be an electrician, right? When we put on that entrepreneurial hat, now there's several hats that we have to take with that there. So you might have gotten into the business of providing legal services. Now, you're not only providing those legal services, now you have to put on your CEO hat at certain times. You might have to put on your IT hat or your HR hat or even your CFO hat, right? So as an entrepreneur, you're juggling many things, you're everything, right? You might be trying to figure out what's happening with the computer, but then dealing with an employee issue or trying to make a financial decision. And as entrepreneurs, if we don't have a team, and very early on in our journey, we're wearing many hats here. And what we see really from this, and just the time constraints that we have and trying to meet the demand for the service or product, is we see several pitfalls. And a lot of these pitfalls that we're going to talk about today are really around the bookkeeping accounting processes. So for business owners, we see that there's no process or procedure in place in order to ensure their bookkeeping is done, right? You might have to go run to Walmart or Target and make a purchase in order to produce your product, and you get that receipt and you might just stuff it in your purse, or you might just put it in a folder or something like that, right? We're not developing a process of every time that we spend money, what is a process? What is our procedure? A lot of times bookkeeping is not fun. It might be overwhelming to a lot of people. It might just be a tedious task where it's just easier to put it on the back burner because it's not really important until, it comes tax time. Um, or we might see, because we put those items on the back burner, that now we're in a position where it's tax time, or that we have to pay New Mexico gross receipts or Navajo Nation sales tax, and we have no books, we have no financial statements, and then we're not being compliant with some sales tax or gross receipts tax. And that puts us in a really hard situation because we might not have the information to file your income tax. And then now it's overwhelming and you have a fear of a large tax bill and everything's starting to build on each other. And it might even come to a place where you're thinking of closing your business. And as entrepreneurs, these are definitely more common scenarios that I see more often than not. And where this presentation is really to start building that foundation there. But before we even get into like the monthly task, the weekly, the annual, let's do some foundational work here. And this is where we really want to identify how information even gets into financial statements, right? And I have this slide here to really show like the importance of bookkeeping in the flow of information here. So over here on the left-hand side, we have this pyramid here. And when we look at who is really the base or foundational when it comes to creating financial statements, when it comes to your internal environment, that information is really highly dependent on your bookkeeper. And your bookkeeper might be something that you outsource to, might be someone that's internal in your organization, or the bookkeeper might be you. But all information that the bookkeeper enters into is essentially what your accountant is going to be reviewing, or your CPA is going to review. A lot of times, when companies grow, they might need a controller or they might need a CFO. But all information that it takes to produce financial statements so that they're analyzed is really dependent on your bookkeeper and the information that they're putting in. So it's very important that when whether you're doing the bookkeeping or you're bringing someone else on the team, is to ensure that they really have the knowledge to really categorize items and to help produce financial statements, because these financial statements are very important. And have any of you thought about getting a loan, or about getting shareholders? Or if you're a nonprofit, you might be wanting to get donations. Or if you're a tribal entity, you might be having to submit financial statements to tribal officials or members. But these financial statements are really going to be key when it comes to reporting federal and state entities. So like income tax, or New Mexico gross receipts tax, or Navajo Nation tax. So different things like that. So the work that a bookkeeper does is foundational to your business in order to produce financial statements, whether this is just kept internally or if it's externally. So let's move on. And I have this question here. So why are accurate and complete financial statements important? Can anyone put in why they think they're important? We've kind of talked about it a little bit here. All right. So how about if we were to say accurate and complete financial statements are important because they provide answers. So depending on where you are in your entrepreneurial journey, yes, I had someone say to see if you're profitable or not, which is exactly right. And financial statements provide answers. So where you are with your business, there's going to come a point in time where you're going to have questions, if you haven't had them already, of saying, can I afford an employee? Right? Or can I afford to expand? Can I purchase this software? Can I afford these tools or equipment? So financial statements will help provide answers on when it comes time to scaling your business. Or they might answer questions not related to scaling your business, but you might be asking, hey, I'm making money, but I'm not able to take a wage, or I'm not able to get financing. I'm not able to pay my bills. And your financial statements will tell the story of your business, and they're so important. Or if you're selling a product or a service, you might be asking, am I pricing my product or service correct? You can review your financial statements and analyze them to get this information, as well as am I making a profit? The goal of a business is to make a profit. Financial statements will help you determine whether or not you're being successful at that or not. Financial statements also help you run your business efficiently and effectively. So we want to make sure financial statements report um, accurate information, such as, like, are you reporting your income correct? Are you reporting your expenses correct? And that's very important because those both feed into how you're going to be taxed on the income tax time. Also, they help you determine whether or not, what's your budgeting process? Are you on budget? Are you not? They go back to your business plan. The business plan is basically, you set out at the start of your business, this is the direction that we're going. These are the revenue, these are the financial marks that we're going to hit. Having financials will help you go back to those business plan and say, I'm on course, I'm not. Do I need a pivot? Do I need to move? Did I think about this right? So a business plan is always great to go back to. You're going to come to a time when you want to get investors or funding, or it requires you to be compliant with getting funding. So a lot of times when entrepreneurs go out and do get funding, there's a requirement to submit certain reports in order for them to be compliant with the funding. Financial statements will ensure that help ensure that you're safeguarding your assets. All the information on where your assets will sit on your financial statement, and it's a monthly check that you should be doing. It helps reduce risk. It helps manage growth. Helps you keeps you prepared for taxes. And when we look at IRS requirements, they do require you to record keep. So record keep is like the first process, and then bookkeeping is above that. Record keeping is keeping all information. So anytime that you're making a purchase, you want to record keep, you want to keep that receipt there. If you are going and getting a business license, you want to keep that document. That's record keeping. So anything that's really about the organization, you're required to record keep. And this is not just for entrepreneurs, this is also for individuals. So anytime that you're reporting anything on your tax return, whether that's W-2 income or 1099 income, or even your business financials, they want you to keep that information. Financial statements just puts you in a really good position that you're ready if the IRS chooses to perform an audit. There is a probability that that could happen, and you want to be prepared if it does. So we are going to talk about these pitfalls, right? We talked about bookkeeping being put on the back burner and how there's many things as entrepreneurs you're doing. But before we really talk about, okay, if that's a pitfall, how do I avoid it with these tasks and habits here that we're going to talk about, let's lay some groundwork before we even get to that there. So let's talk about bookkeeping preparation, right? So I understand that bookkeeping might feel overwhelming to most people, and it's essential for every business to be able to do some bookkeeping here. So what would be really great is there's a lot of good books that break things down to a more simple level for you to better understand like the bookkeeping process, go into some more terminology here. But I like to explain bookkeeping and before we jump into these other items, just laying some groundwork here. But there are accounting terms that we need you to understand. And this is not just a relationship between you and your bookkeeper or your CPA, but learning accounting terms as a entrepreneur only puts you in a position of understanding and having a good, solid financial foundation here. So some of the accounting terms that you'll hear a lot are assets. What are the assets? Assets are everything that a business owns. You'll also hear it's a liability. And a liability is everything that a business owes. So if you took out a loan, if you have accounts payable, someone sent you an invoice and you haven't paid it, that's a liability. You might hear equity. That is your portion, your piece of the pie there. You might hear revenue, which I think that a lot of people are really confident in. So like income or revenue, that's the money that the business receives. And then we have expenses. Expenses are anything that we use in order to reduce that cash that it takes the business to run there. So really understanding those accounting terms is always going to help you. Also centralizing your information. So this can be done in Excel. So a lot of times taking on an expense of using like QuickBooks or Xero may not be in the budget at first. So you can track your income or your revenue and your expenses on an Excel sheet. That will help when it comes to year end. Or if you have the funds to do so, is to move into an accounting system such as QuickBooks, Wave, Xero. All of those items will help you with your bookkeeping process. Also, there is a thing called chart of accounts. This is essentially listing each account that is connected to an asset. So we might have a cash account that's an asset or a checking account that's an asset. That's going to live in your chart of accounts. So really looking at that, if you do have QuickBooks, you do have a chart of accounts or any type of accounting system, it's going to list that and for you to look at it and to see what's in your accounting software. There's a lot of times, QuickBooks does make the bookkeeping process easier, but a lot of people can get into issues with this where not really understanding the functions of the accounting system. So if doing the bookkeeping yourself is important, then taking a course that will help you understand your accounting system. Also, we have a centralized place where you save your documents. We use a system called HubDoc for some of our clients, and that's just a place that we put that in there. We can tag them, or you could use something like save them on your Google Drive, or save them inside of QuickBooks and attach them to transactions. You want to think about how are you going to bill and how are you going to collect payments. You want to have a discussion with your accountant, your CPA, to really understand what taxes will affect you. A lot of times entrepreneurs will jump into business and we're excited. We want to sell our products and our services. And then we really don't understand like what really is affecting us as business owners until sometimes it's too late. We might get a letter in the mail. So really being proactive and having those conversations with an accountant, CPA, to say, this is my industry, this is my business. tax wise, what do I need to be aware of? And they can have that discussion with you. And really understanding what's acceptable business expenses, right? So, how many of you have heard either on like Instagram or TikTok or Facebook about people saying, oh, yeah, that's a tax write off. You can write this tax off. So, anyone in here, give me a thumbs up if you have. Definitely. And while those are great platforms to get information, some things might not be specific to you, your organization, and you really need to understand what's acceptable and what's not. And for every person in different industries, it might look different. So, kind of saying one situation fits all, we really want to go back and verify that information. So I always like to use, go back to what the IRS says as far as what's an allowable business expense. So IRS says that for a business expense to be allowable should be ordinary and necessary, right? Like that's really great information. But what what does ordinary or necessary mean? And how does it apply to us in our businesses? So when we look at ordinary expenses, they're ones that are common and acceptable in your industry, right? Like this tractor here, it's common and acceptable in your industry. And a necessary expense is one that's helpful and appropriate for your trade or business. Okay, so I always take this back to this slide here and explain ordinary and necessary in this aspect. So I'm an accountant, I'm a CPA, I have my accounting firm. For a business expense to be ordinary and necessary to me, has to be common and acceptable, helpful and appropriate. So would it be acceptable for Hillis Parker and Associates to purchase a tractor? Anyone here? No, it probably is not, right? What if I say I have like the most brilliant ideas just sitting on a tractor and on my laptop here? No, but a tractor for someone that is in that plants food or wheat or corn, that is a common and acceptable expense in their industry. But something that would be necessary is for my industry is purchasing a calculator, right? That's helpful and appropriate. It's common and acceptable in my industry. So it's really good to really go back and say, is it common and acceptable? Is it helpful and appropriate? Do we have a question here? What is your question?
Hi, Amber.
Hi.
Hi, I have a question.
Mhm.
So for like indigenous businesses, like for mine, where the primary goal is the social impact of creating culture and language revitalization, I have a friend who is kind of in the same field, and he reports his expenses when he goes to like cultural ceremony where he might gather information that would help his business. Is How do you see that?
I would say if that was like research, and it's documented, right? Like we have something that to show what came about. I would say that that would be acceptable. Um, and it's no different than if someone went to a museum, right? And did research there or took a trip to learn something in another space. So I would say that that would be or a common and acceptable and helpful and appropriate, but I would make sure that you're documenting what it is, right? And I think this really kind of goes back to what was like the original purpose of that trip, right? If you're going to, say you're going to, I don't know, Washington State, and you went out there to visit family. but then all of a sudden, it turns you're meeting with clients, right? We just want to make sure that documentation's there. And if the purpose of that trip was initially like personal, then making sure you have really good documentation to support any like business expenses that you have. But if you went and the intention was to go to a conference in Washington State and you visit family there, right? It all kind of goes back to documentation and what support do you have if it was ever audited. So I would say in that case, yes, just based on the information that you provided. So we're going to move. Yeah, absolutely. So this kind of goes into like common business expenses here. So some common business expenses that we see as startup costs. And I think this is like the biggest area where entrepreneurs are losing out on ways to reduce their taxable income as startup costs. So a lot of times there's costs that are incurred before even getting to the point of opening up a business bank account or setting up or having you might go to a lawyer for a consultation in order to set up your LLC. That's part of a startup cost. It's money out of your pocket before even opening up the business bank account. And that's information that you definitely want to give to your bookkeeper or that you record in your financial statements. So advertising, consulting fees, dues and subscription, office supplies, salaries and wages, inventory, material, rents, licensing, continuing education courses, business meals, but just make sure that the business, that it's a business purpose and that it's a reasonable cost and that you're documenting, right? So a business meal is not going and, having this $2,000 meal and then trying to write it off in your business. If you're not generating a lot of money and that's not really like you cannot go back and have documentation for that. So I would just be really leery about that. Also, there's if you work from home, you have the ability to have a home office deduction. So it's taking a percentage of your rent or your mortgage expense, taking a portion of your utilities, internet, your homeowner or renter's insurance, and property tax. If you have a personal cell phone that you use for business, you can take a portion of that. And if you have car expenses, there's two ways to do this. One's the actual method and the other is the mileage method here. So a lot of information, right? And a lot of information coming at you. So let's take a little break. But in the meantime, let's just tell me your favorite candy. Just put it in the chat box. Does anyone love gummy worms in here or gummy bears? Those are probably my favorite. And I just love this slide because it's just beautiful. You have someone chocolate, almond joy. I love almond joys too. Sour gummy worms. Awesome. All right, so these next couple slides that we're gonna get into are really the meat and potatoes of what we're our discussion today. So it might feel like a lot of information coming at you at once. These slides will be available to you so that you're able to really just be present in the moment, listening, jot down some notes, but you don't have to write everything that's on the screen. So just be really aware. This might be something, if you're new in your business, just to have an awareness of this. This is something that you're going to have to do. Or if you do have a bookkeeper, someone's doing the work, this is just a good checks and balance and go back and say, okay, is this being done? And it just makes you stronger as an entrepreneur to be able to have these checks and balances here. So let's just get into this. Okay. So if anytime you need to step away, feel free. A lot of information, but it's good information. And it's all something that later on you're going to feel very confident about. So when we look at some tasks, right, on what needs to be done when it comes to your bookkeeping task. So on a daily or weekly basis, you want to store any of your business transactions using some sort of system. whether this is HubDoc, Google Drive, Dropbox, or QuickBooks. And it's not enough just to rely on your bank statement or your credit card statement, or it's not enough just to say, I have the receipts in the shoebox, because believe it or not, receipts fade. And I've seen this a lot of times. So, but if you go and you start the habit of storing these, right? So I gave you the example, you go to the store, instead of just stuffing that into your purse or your folder, you take a picture of it and you upload it to your Google Drive or your Dropbox or your HubDoc. Or save it on your phone and have a folder for that. But getting into that habit, a weekly, daily, if you have that transaction, take a picture and store that information there. Believe it or not, preparing and sending invoices when you start getting really busy can be overwhelming. So we want to make sure that you're scheduling this time on your calendar, that you're preparing, you're sending those invoices as soon as possible, as well as you want to record transactions into your accounting system. So if you're entering those invoices, you want to make sure that you're doing the client invoices. If someone sends you an invoice to pay them, make sure that you're entering that so you know when it's due, or that you're entering your bank deposits or your transfers, or even your vendor bills and expenses here. So deposits, depending on how you're getting deposits, can kind of get overwhelming. A lot of times I see this with e-commerce, people that are selling using Stripe or PayPal. We love to sell our products and services, but making sure that those are being recorded in your financial statements and doing that on a weekly basis really takes the pressure off, especially when you're looking at, 50 transactions and it gets overwhelming there. So these would be your daily tasks here. Next thing is biweekly. So biweekly, you want to get into the habit of recording any unrecorded transactions in your accounting system. So a lot of times, if you're not saving those receipts, or it's a transaction that you really weren't going to make and you end up making it, sometimes it's hard to remember what has happened, right? Like, how many of you had a situation where you don't even know what you ate for breakfast yesterday or you had for dinner? So imagine trying to remember transactions or what has happened. So making sure on a biweekly basis, you're going back through and making sure that there's no unrecorded transactions. You want to pay your bills or your contractors. When we get into areas of, not only do you want to provide a good product and service, but you also want to be great to work with. And that means paying your bills and your contractors on time. Some of you might have to run and review payroll. That's important. So make sure that you're reviewing that and that you're always taking money aside for your income tax, your sales tax, or your payroll. And you also want to review your cash flow. So in your accounting system, if you're using the system to bill out, so send invoices out, or when someone sends you a bill, you're putting it into your accounting system, you have the ability to run different reports, such as your accounts receivable report, to show when money is supposed to come to you, or your accounts payable. How much money do I need to have in order to pay my bills? So looking at this information on a biweekly basis is going to give you information on what the business needs, how the business needs to perform. On a monthly basis, right? So hopefully you're on task and you're saving your receipts. You're making sure that you're categorizing those items into those cute little buckets in your financial statements. On a monthly basis, you want to reconcile your bank and accounting and your credit card accounts. A lot of times what I see, especially if anyone's using QuickBooks, is they believe that the connection between the bank and QuickBooks is always going to never break. It's never going to break. They think that, but there's been so many times where we have reconciled these accounts and we see that the connection did break and not all the information is in the financial statement. So we have to pull that in, or there might be a glitch where it doubles up payments and your financial statements wouldn't be correct. So really going back to those source documents like the bank statement, the credit card statement, and reconciling off of that. If you have a balance sheet, we really want to make sure that all items on your balance sheet is reconciled. So like if you have any loans or liabilities, we want to make sure that they're the proper balance. Say an opportunity came up and someone wanted to invest with you. You want to have financial statements complete and accurate as much as you can in order for investors to see this. You want to record any month-end adjusting journal entries. You want to review your accounts receivable report. If you're dealing with inventory, then you want to check your inventory levels and adjust the software if it's needed. A lot of times with inventory, there might be theft and we have to adjust inventory down, or there was we do an inventory count and we actually see that there's more inventory and it's because it wasn't entered into the accounting system. Before vendors, you pay vendors, it's very important for you to get a W-9 so that you're able to send a 1099 out at the end of the year. So you want to collect any W-9 forms before paying your vendors for that month. Also, you want to calculate and remit any sales tax, gross receipts tax. You want to review your financial statements. And when you review your financial statements, we really, we look at the income statement. People also call this the profit and loss or your P&L. You want to review your balance sheet, and you also want to review your cash flow statement. And you also want to review your budget to actual, right? So at the beginning of your business, you're going to do your business plan. You should have a budget. You want to go and say, hey, did I meet my expenses or did I exceed them? Am I under budget? Oh, you know what? I thought that this month I was going to make XYZ and I didn't. So it's a really check and balance on a monthly basis versus at the end of the year saying, oh, you know, I was really supposed to only spend X amount when it comes to continuing education. On a quarterly basis, you want to review your accounts receivable report. This will show you everything that is really due to you. A lot of times, this is not something that people are really actively looking at. So they might have thought that someone paid them, but it really didn't happen. Or they did get paid, but it went into their personal account and not the business. So it's actually overstating their accounts receivable. You want to calculate and pay your estimated personal income tax. You want to calculate and remit sales tax, gross receipts tax. You want to calculate and pay payroll tax. You want to review your budget to actuals. You want to review your business goals, your marketing plan. When it really comes down to the work that we do as entrepreneurs, we're so excited when we get started. Sometimes we don't have that business plan or that marketing plan, or we don't have those business goals. And this is just a gentle reminder that if you don't have those are so important because they're like the guiding light. They let you know whether you're on track or not. And it's okay to pivot, but we really need to have a direction and be going back and meeting and saying, where am I to my business goals? Where am I to my budget? Where am I to my marketing plan here? And so the last item that we're really going to want to do, and this is on an annual basis, right? So at this point in time, this usually happens, you know, in December, January, where we're really looking at these items here. So again, like on an annual basis, usually right after year end. So if year end is a calendar year, so January 1st, you know, that first week in January, sit down and look at your accounts receivable again. Decide whether to send your balance to collections or write it off as bad debt because you're not able to collect. You want to look at your year-end inventory levels and adjust that. People who have employees and are running payroll, you might have to reconcile your payroll reports to your W-2s and your W-3s If you have loan balances, you want to make sure that those balances are correct on your financial statements and that your any interest is really expense. You want to record any depreciation, and you want to do a review of your full year financial reports for accuracy. A lot of times we really underestimate what we did, right? And it's really until we see those numbers that we really feel like, oh, well, this was like more of a successful year than I thought. Or, you know, I really thought that this product or service was going to perform, and the data shows that it doesn't. You also want to file your taxes and do your federal income state taxes. You want to do your federal employment taxes, your W-9s if you have to, or your 1099s if you have to send those out because you've contracted with non-employees. And then W-2s, their sales tax, gross receipts tax. And this is really the oversight here. So anyone who's further along in their business, this is really the slide that you, when it comes on an annual basis, to get off and say, okay, bookkeeper, send me my accounts receivable. Let's look at this. If you have inventory, saying, hey, let's look at our inventory. This slide will help. And as long as you're implementing those weekly, monthly, quarterly tasks here on the annual basis, will really help make sure everything flows great here. And a lot of times, like, these are new concepts that are really hard to understand, right? Sales tax is a very complicated subject. And this is where, if any of these subjects are not, you don't feel comfortable with them, to really reach out to someone that can help you. We're available. I'm sure that there's plenty of resources out there, but this is where we really need to take ownership, and if something scares us, dig into it, try to understand it here. So when we look at the task and habits that we talked about, right? They're really set there to help you create financial statements. And when we look at the purpose of those, the biggest one that we see is that it helps you file your taxes, right? And not only that, but those financial statements tell the story of your business and gives you the information to make good financial business decisions. As entrepreneurs, it's so important that we make decisions based off of data and not feelings there. There's a time when we do have to act on feelings, but really going back to the data and saying, does it support it? And building these habits and completing these tasks will really put you in a situation where you're able to do that there. So some tips that I really want to leave with you today, right? There's a lot of information that we did in those last, 6, 7 slides. And if I could wrap things up and really tell you, like, the highlights of, be aware of this. These are tips that are really going to help you. These would be it. So save your receipts. We talked about doing this in Google, in HubDoc, Dropbox. Save your receipts. It's so important. I have many people say, I have my bank statement and I have my credit card statements. That's enough. If I ever were to be audited, they can see that the transaction happened. But what happens if you have a transaction at Sam's Club or Costco and you bought a $300 printer and you didn't save that receipt? IRS could come back and say, hey, did you buy $300 worth of chicken, or did you buy a $300 printer, right? And having that source document is really going to help defend your stance in that way. W-9s are so important to get for your vendors before you pay them. It's a requirement for us to send out 1099s to contractors that we spend over $600 on. So it's really hard to get W-9 from contractors when you did business with them in February and you're asking them next year in January to provide you this information. There's a big difference between contractors and employees. And if you're ever working with contractors and employees, go to the IRS website and look at the breakdown of how they would classify these individuals, because if they're incorrectly classified, it could cost you money. So just have an awareness of that. Complete your bookkeeping. I know that you're very busy as entrepreneurs. And so if you have to delegate this out, if you have to pay for this, if you have the budget, it's really important to complete those bookkeeping tasks. Review your financial statements. At first, financial statements are going to look like just numbers, and it's going to feel overwhelming, but just take the time to talk with your bookkeeper or hire an accountant to really explain those financial statements, to ensure that you're building that foundational, financial foundation for yourself, is really to dig into those financial statements and build a budget. It's so important when I work with entrepreneurs. If they don't have a personal budget and a business budget, a lot of times what we're dealing with is maybe pulling more money out of the business because we weren't really prepared for certain things to come up. And that's what the business is there, depending on how you're structured. But building a budget is so powerful. And if you're able to exercise that budget and keep yourself accountable, it's a powerful tool in itself. Use an accounting system when you have the funds to do so. Document your meals and your travel. Get a business bank account, especially if you're an LLC. And when you're an LLC, don't commingle funds. A lot of times, this is probably the thing that is going to cost you a lot of money if you're going to do a cleanup catch up, is us as bookkeepers, accountants have to go through and say, hey, is this a business expense? Is this not? And that could be added expense on your end in order to get your books in order. Plus, if you are ever audited, or if you need to prove a stance in any position, would you feel comfortable giving a bank statement to a lender, to a state agency, and on your bank statement has, Uber Foods, or has Disney Plus or Netflix, and they're seeing all these personal transactions in there? We really want to be credible as business owners, so not commingling funds. Also, when we commingle funds, we put ourselves in a position where we could be dealing with risk. If we don't show, especially with an LLC, if we don't show that we are two separate entities, if we were ever sued, it could open up that if you're personally sued, it could open up where the people could obtain your business assets, or vice versa. So double check the advice you hear on social media. Not all advice is true, and know when to ask for help. We, as accounting professionals, and a lot of people that have the talents and the resources to help you, like, we love seeing entrepreneurs that are starting out and they're asking those questions. We want you to be proactive versus reactive there. So just know when to ask for help. This is overwhelming. We don't expect you to know everything, but start asking those questions. And sometimes we don't see our blind spots there. Follow your taxes. Save 20 to 30% of your income in a savings account for taxes. And when you can afford it, outsource your bookkeeping. And if the biggest thing that I could leave you with today is to take ownership. When it comes to finances, your business, it's very overwhelming, but really take ownership. The success of the business is really on your intentions and asking for help, taking full ownership, accountability, and digging into that information there. So if you need to find me, here's my information, as well as in the chat box, there is a quick survey. If you could do that, it could take about 2 to 3 minutes. It really helps support the funding partners to give them data on whether or not presentations like this is beneficial to you or not. So I will open it up for questions, but I do see that we have some here. So one question was, do we need a W-9 still if we pay under $600? Not necessarily, not really, but if you have, if one payment is $500 and you expect to use them more where it would go over the 600, it would be beneficial to get that W-9. Sometimes we understand that we might think that we're going to use someone once, but then it goes over the threshold. You can just ask them for that then. So I had someone say, would you talk more about the differences on how to possibly choose an LLC, S Corp, or self-employed status? So this really goes back to two separate subjects here. So when we look at your how you file with the state really goes back to like a legal status. An S Corp is more of a tax status there. So an LLC could be an LLC and tax like an S Corp, but it's a decision that has to be made there. So a lot of times people will go and say, like a sole proprietorship, anyone can start a business and say that I could start today and say, I'm going to sell popsicles, right? I'm a sole proprietorship because I'm generating revenue. When I file my taxes, it's going to be under my own Social Security number. Sometimes you can get a EIN as a sole proprietorship too. If you wanted to go in the direction of choosing an LLC, this is really a good conversation with like a lawyer. They're able to draw up that paperwork as well. But when we look at LLCs long term, what is the purpose of the business, right? And is there any situation where it could open you up for liability? Say, for instance, you wanted to open up a gym, right? Is there an ability for someone to sue you because they got hurt at your gym? So a limited liability, an LLC would be beneficial for you to go into, right? You can always choose to be taxed like an S Corp. They usually say that to hit an S Corp status, you really want to be generating at least 60,000 in profit. So that's not revenue. Revenue's your top line. So revenue minus expenses, whatever your net income, your profit, sitting at 60,000 or more is beneficial to go to an S Corp. Or one thing to think about too with S Corps is whether or not you want to put yourself on salary. You may not be at that position of profit where it's beneficial on the tax side, but you want yourself on payroll and you want to be able to pay that. So don't know if that answers your question, Kelly, but you're always welcome to reach out if there's more specific questions that you have about your business. So another question was, if we need a W-9, if we pass the threshold of 600 paid to them in 1 year. So yes, this is only 1 year. So say that in year one, you paid someone $599. You don't have to send a 1099. Say in year two, you pay them $1,000. You want to send them a 1099 for that. So how can you go back from an S Corp to an LLC? You would just have to revoke it. Do you need a new EIN number or CR? No. So an S Corp status is how you're taxed with the IRS. So you would still keep the same EIN number, the same New Mexico tax ID number. You wouldn't have to set up a new bank account. You're just simply being taxed a different way. And if there was ever a point that you wanted to revoke your S Corp status, you would be able to do that too. But choosing it again, you have to go through a process then. I don't remember what paperwork number that is, but I'm pretty sure you could go on the IRS website to see like to revoke an S Corp there. Absolutely. You guys are more than welcome to reach out to me. I'm really happy that you guys came. I'm here as a resource to support you. Reach out to us if you need any help.
Thank you so much, Amber. That was very informative. I definitely learned a little bit. And thank you everyone for attending. As Amber mentioned, we would just request if you could fill out a survey. I just sent the link again. Just giving us feedback on this presentation. And we really appreciate you attending. And just a little shout out to Amber. We did a podcast recording with her last week where she was able to share her journey of becoming a CPA, starting her business, and that will be coming out on the Indigenous Entrepreneurs podcast tomorrow morning. So if you follow us, or if you don't, you can just look up Indigenous Entrepreneurs Podcast on Spotify, and you can learn more about Amber's story tomorrow morning. And this recording will be posted on our YouTube channel, and we'll email you out the link as well as the slides. So thank you so much, and I hope you all have a good afternoon.
Thank you.
Bye-bye.